Good morning, everybody. Happy Monday. Beginning of a new work week for most people. I'm glad you're here. Appreciate you joining me on your Monday, spending a little bit of time here at CryptoCoinMindSet. And as always, I'm here to help you get your mindset on crypto. Got some good stuff to talk about today. But before we jump into it, we're going to be dissecting a short video by Lena Petrova. And I love this lady's take on financial situations, the world situations, and how she relates that to the way we should see the economics of it and the future of it. I really appreciate her perspectives. Link to her channel is in the description below, and link to the entire video that we're going to kind of be dissecting a little bit today. I'm going to give you my 2 cents is also in the video, in the description of this live stream as well. So make sure you go ahead and check it out. And if you don't follow her, I'm going to say, please go follow her, show her some love on her channel. And I think you'll find that she has unique perspectives when it comes to a lot of the economic happenings in the US, I would say primarily, but in the world as a whole. So go ahead and check that out. Links in the description. Matter of fact, if you are new here, make sure you hit that subscribe button, tick that bell icon, click the all. That way you get notified every time I put out a live stream or a new video. We are live on YouTube, or we are putting out content on YouTube. Like, I think Sunday is the only day of the week I take a break. Other than that, we've got stuff coming on our YouTube channel like daily. Make sure you check out our community tab. I put out a new piece of information or a poll, usually a poll, on our community tab on a weekly basis on Tuesdays. So check that out. Okay. But what I'd like to do is start out by checking the markets. We've got some big market movement going on right now in the cryptocurrency space. You know what? Let me bring that full screen so you can see that. And I'm going to refresh that page just to make sure we got the current pricing right here. Yeah. We got Bitcoin hovering in at almost that 28K mark. I mean, yesterday or Saturday, whatever, when it was like 27K ish. And it was lucky to be there. So we've seen a bit of an upward move with regard to Bitcoin and the market as a whole, to be quite honest with you. But let's take a quick run through some of the prices. And Ethereum, for the longest time, Ethereum was hovering at that $1,600 mark, and it's just below that now. It's regained a lot of the losses that we saw even on Friday when we were doing crypto on the rocks. And let's see, BNB back up there a little bit, closer to that 215 where it's been hovering for a pretty considerable amount of time. XRP. Now I talked about XRP on Crypto on the Rocks, and how it basically dipped well below that 50-cent mark. I mean, and we're seeing now a recovery of that. It's almost back to 50 cents for XRP. And, I honestly wasn't sure why that was happening. And there's a lot of fluctuations in the market. I get that. But, XRP, since their victory in the court system of not being a security, has been pretty consistently at the 50-cent mark or higher since that decree came down from the courts. Let's check out Cardano. Now, Cardano back up there. I told you on Friday, Cardano, big, huge buying opportunity at below 24 cents. I mean, don't get me wrong. I think there's, again, a lot of price volatility, but I mean, even at this 25 cents, pretty much straight up, and it's still a great buying opportunity, in my opinion, for Cardano. Again, not financial advice, not a financial advisor, old guy. But I think that's a good price for Cardano. Let's go look at some of my other favorites here. Matic, still down overall in the last over the week, but not doing too bad over the last 24 hours. Litecoin, you know, again, if you've been here for any length of time, you know I like Litecoin. It's what it's the cryptocurrency that was meant to be currency, in my opinion, that you could use and you know, get value from using it for what it was meant to do. At $63, up 4% in the last 24 hours, 1% overall in the last 7 days. I've been getting notifications about Bitcoin Cash price actions up, up, up. Bitcoin Cash, another one. It's what it's meant to be used for, cash, right? Use it for transactions, etc. Up over 8% in the last 24 hours, almost 6% over the last 7 days. That's a bit crazy if you ask me. Okay, Link. I like Link. You know, it's in our initial investors crypto portfolio. Bam, you know, doing pretty good here, up 2.5% in 24 hours, about 1.5% over the last 7 days. And let's check Avalanche. I like Avalanche also in that initial investors portfolio, beginner investor portfolio at around 941, up 3.5% in the last 24 hours, but still down over the last 7 days. Stellar, it is our DCA option on Crypto on the Rocks. And for those who don't know, Crypto on the Rocks every Friday, whoever is on the stream gets a chance to vote at what we're going to be DCAing into. The idea is I'm going to show you, and we'll talk about this a little bit more, that, you know, just a little bit of money every week can make a big difference in your overall portfolio. And finally, you know, I'm a Monero fan. I like Monero, up about 0.5% in the last hour, but still down about 1.5% over the last 7 days. So that's a quick look at the markets right now. And but what I want to do is I want to jump into this video from Lena Petrova. Again, link to the video is in the description of this live stream below, as well as the link to her channel. Again, go follow this lady. I think you'll appreciate the information that she's putting out, and she's putting it out like daily, sometimes 2 times a day, video content that I think is, it's not necessarily crypto specific. And I know that's what this channel is. It's a crypto specific channel, but you want to know what? In order to understand the bigger picture and things, I mean, you can't have just tunnel vision on the cryptocurrency space. I mean, that just does not make sense in what you need to think about. I mean, if you're going to be investing in anything, in my opinion, of course, again, not financial advice. Let's put that up there. So, you know, woo, you know, because some people can't think for themselves. But if you're going to be considering investing in whatever, it doesn't matter, stock market, gold, silver, cryptocurrency, the point is you need to do your own research. You need to make your own decisions, and you need to kind of have a bigger perspective, a larger perspective of everything that's going on in all the various markets, because as much as you may not want to believe it, these markets are all intertwined. They're all interconnected. And it's that way on purpose. That might be a video for another time. But the point is that in order to make intelligent investments, again, doesn't matter in what, doesn't it make sense that you should have as much information as possible? Call me crazy. Crazy. Okay. All right. Save that for Crypto on the Rocks. But let's take a look at her video here. And I've got it broken into sections. We'll watch those sections, and I'm going to come back in and we're going to talk a little bit about what she's just mentioned, and give you my 2 cents, as well as maybe a little bit about how that pertains to the different markets, etc. And again, if you're just joining in, make sure you jump in that live chat, say, hey, let me know where you're watching from. Be sure to smash up that like button, smash it up. All right, let's jump into her video here. I'm going to make it full screen for you, so be a little bit easier for you to see, and got the volume turned up, so you should be good. All right, let's listen.
in the United States are reporting their third quarter results this week, and it is definitely starting to become quite obvious that things may be much, much worse than we originally expected. The largest banks in the US, Wells Fargo, Bank of America, and JP Morgan Chase, are posting roughly $5.3 billion in combined third quarter charge offs on their delinquent loans. A charge off is effectively an amount that someone owes you but will never pay back. The total value of charge offs, $5.3 billion, is a conservative estimate, and I can almost guarantee you that the real amount should be much, much larger than that.
Okay, so we're gonna stop right there, and let's talk about what she's got going here. So she's basically letting you know, like, the major banks, okay, the Wells Fargo's, the JP Morgan Chase, they're posting their losses at this point for the third quarter. And as she's going to talk about a little bit later, that they've been carrying these losses for a while. That's going to be the next section. I'm trying not to jump ahead on that. But basically what they're doing is they're writing these charge-offs off of their books. So they're claiming the losses for these charge-offs. Now, charge-offs have been something that's part of the banking system forever. And basically it's a debt that the bank has incurred that is not something they're going to be able to actually collect on. So, there's been a lot of information coming out recently about delinquencies in, like, car loans, etc. So the amount of delinquencies and just the amazing amount of debt that people are carrying just to survive on a day-to-day basis is increasing exponentially, and many people are defaulting on these. And in order to eventually get that debt off of their books, these banks need to write it off, and that's written off and sometimes sent to a third-party collection agency that buys the debt, basically, and then just hounds the living shit out of the people who actually owe the debt in order to collect it and make some money on it. Now, again, that money at the end of the day doesn't end up going to the bank because they've already written it off. They're like, yeah, see you later. We're done. You're a loss. It affects their, whoever's credit rating, yada, yada, yada. Okay. So, realize that this is a normal function of the TradFi banking system, and that these banks normally do this kind of thing all the time. My question is, that's, first off, 5.3 billion in losses. And as she mentioned here, she thinks that's a conservative estimate as to what they have. And remember this, she's going to mention it in the next section, that they still got more they're going to write off later. They're just doing the bulk of it now. So, they're not, they're not panicking people like you and I, because they don't need a bank run. They ain't got your money. The bank does not have whatever money you think you have in there, or you can see on your mobile app, or your when you log on to your bank account. That's just ones and zeros on a screen, and nothing more than an IOU to you, because that money's not there. But, and quite frankly, the sooner you realize that, the better off you're going to be. But that's a whole nother issue, and maybe a bit beyond what we're talking about right now. But my point is, so the banks are already fragile. We've seen 5 of them, 5, go under already this year. All these losses that are coming up in this last half of the year, is that what it's going to be to, like, trigger the next collapse of the banking system? I don't know. Maybe, maybe not. But let's get into the next section. Let's have her let's have her talk the next section, and then we'll jump back in here, okay?
Worst part about this is that these banks, along with hundreds of smaller banks that are writing off many of their bad loans too, they have been carrying these losses on their books for a while, and only now are they taking these losses. They're taking these losses in the third quarter because it would look incredibly bad for them to write off billions of dollars in uncollectible loans in just a couple of months at year end. Nobody wants that. Shareholders would be extremely upset. So, in order to smooth out their earnings, they're taking somewhat of a big hit now, and then they will write off some more at year end, likely a smaller portion so as not to scare their investors and the public too much. That is the unfortunate truth.
Well, she's not wrong there. That certainly is the unfortunate truth. I mean, they're going to take the losses because they've got them on their books. People are being delinquent in their loans, etc. And again, they're taking a huge hit right now to try and not panic investors. Screw the investors. At the end of the day, you want to know what? If it wasn't for the customer base, the me and you, if it wasn't for that customer base, the investors would have squat. Okay. So I don't give a crap about what the investors are getting. If I was an investor, maybe then I would. But you know what? End of the day, it's like anything else. You're investing, you're expecting a return, but you don't always get a return. And, quite frankly, I know for decades on decades at this point, the banking system has probably been a relatively stable investment sector. These days, that's not the case. I mean, again, five. See my hand right there? 5 so far this year collapsing. That's insane. That's insane. You haven't heard about collapses since 2008, which again was another greed-filled spectacle, but again, not what this video is about. My thought and question continues to be as we go forward here, is these write-offs, these losses being taken by these major banks? Because again, we've seen outflows, and she's going to talk about outflows in a little bit in the next section. They're huge. People have been taking their monies out of the bank now, smartly, frankly. But then what they've been doing for the most part is taking them out of the smaller banks, the regional banks, the credit unions, etc. And I love credit unions. I've always been bank local, and I use credit unions myself. But they're taking them out of those smaller banks, those credit unions, for example, and they're putting them into the bigger banks. Why? Because these banks are basically declared by the government too big to fail. So they're sitting there basically going to be 100% backed, even though by law deposits only need to be backed to 250K by the FDIC. And honestly, if this banking system goes under, that FDIC insurance ain't going to be nearly enough to cover everything. But that's a whole nother video. So again, my question, and feel free, put it in the comments. If you're watching this live stream on a replay, stick it in the comments below. I will reply. And my question is this going to be what ends up ultimately collapsing the next group of banks? I don't know. Let's see what she's got to say and check out this next section.
The total charge-offs as of the third quarter is the highest since mid-2020 when the pandemic was in full swing. And in addition to that, the write-off of $5.3 billion is nearly twice the amount that banks recorded as charge-offs at the same time last year. So this is just the beginning.
That's crazy.
As delinquency rates have been on the rise, Bloomberg believes, and I certainly agree with this assessment, that charge-offs will increase, meaning banks will have to record significant losses, actually show them on their financial statements instead of carrying them over from month to month, as they do with the unrealized losses on commercial real estate loan portfolios. that is going to become the second hit that will likely put many small to mid-sized banks out of business next year. There are several videos on my channel that explain that in further detail. But essentially, vacancy rates are surging as flexible work arrangement and remote work continue to be the norm. And as office buildings see higher vacancy rates, landlords are losing substantial amount of cash flow, which will ultimately impact the valuations and lead to a decline in the value of these commercial real estate loans.
Now, huge piece right there. And everything we talked about and all these write-offs that the banks are putting out there currently, okay, so this 5.3 billion, this is basically consumer debt that they're writing off that they're never going to collect. Like she mentioned, and I mentioned earlier, the amount of debt is just skyrocketing. Okay, consumer debt is just skyrocketing. And along with that rising of the debt is the rise of the delinquencies that go along with it, because people are using debt just to survive these days. I mean, at this point, people are using credit cards to buy groceries. I mean, have you been shopping lately? Of course you have. You have to eat, right? These prices are just astronomical. And then you've got, when they come out with these CPI numbers, that they're like, oh, inflation's going down as long as you don't account for food and fuel. Hello, you need to go to work in order to make the money to support yourself, and then you got to eat, so you need the groceries, but yet people can't keep up with what's going on with that. So what is their option? They go into debt in order to survive, and then eventually start drowning in it and can't keep up with it. Then these too big to fail banks got to write it off. Now, from there, she's talking about the ever weakening commercial real estate market. Traditionally, a strong sector for banks to invest in, right? To provide loans for. And I mean, you can even invest in those kind of REITs on the stock market, the real estate investment trusts that primarily are in commercial real estate. Well, again, as she mentioned, one thing that COVID did was basically brought everybody to remote work. Okay, everybody, most people to remote work. For many of these companies, there's no need to hold all this commercial real estate to have your people come into the office every day. Now, have people been coming back to the offices and back to the to working in the traditional office setting? Yes, of course. I mean, I get it, but there is still a huge percentage of people that either part-time or full-time work remote, so from home. It made it easy, and well, it made it a necessity back in through 2020 to be able to do that, right? Well, companies realized that, guess what? I don't need to hold all this commercial office space because I can funnel it all. We got the infrastructure to run it remotely, have people working remotely. So why would they be spending all of this money on rent to have a office setting that they don't need anymore? This also puts the crunch on the people who own those buildings. I know in a lot of the cities that I go through, there is so much commercial real estate that's, for lease, for rent, whatever. I see the signs all over the place. And again, I believe that a lot have come back. A lot are maybe in a lesser degree, but they're back into the office. But there's still a lot out there where this particular market, this particular real estate market is soft. and going to continue to be soft as we go forward into 2024. This is going to add additional pressure to the banks. They're already writing off the consumer debt losses that we're talking about here today. But now you're talking a huge sector of their loans, a huge piece of where they've been lending money out to the commercial sector, which again, traditionally safe haven. Yeah, we're going to get paid back for that. Not so much anymore, I don't think. Not so much. I think we're going to see that that's going to be a lot more difficult area for lending. And I believe we're going to see that, well, you know what? She's going to mention it a little bit later, but we'll talk about that in a minute. Let's get back to the next section here, and we're gonna go over that again. If you're watching the live stream, jump into the live chat. Appreciate any questions. We'll answer them. Throw them on in there, and make sure subscribe, like, smash that like. Appreciate it. All right, let's get back to her talking here.
But that's not even where it ends. This is truly a domino effect. I used to audit banks for many years, and you have to understand that banks are heavily regulated entities. The regulators require that banks reserve a certain amount of liquid cash to cover what they believe will be written off in the near future, usually 6 to 12 months from now. When economic conditions become more difficult, when there is more uncertainty and volatility, such as now, regulators may ask that banks increase their reserves. This means that banks will have to keep more money readily available, set aside, proportionate to the amount of bad loans that they expect to have in the near future. This means that not only will taking out a loan become increasingly challenging for us due to high interest rates, but also lending standards will become more restrictive. I believe the same is true for credit unions, by the way.
All right, and I mentioned credit unions earlier. I agree. I mean, for a lot of these things, it's the local regional banks and credit unions that have put out a lot of these loans to create the ability for local growth, right? Again, a big proponent here of shopping local, of banking local. I get it. Your community is you, and you are your community. I get that. I appreciate that. And you think that'd be just the opposite, because of cryptocurrency is global, and yes, that's the great part about cryptocurrency. But I mean, look at El Salvador, for example. I mean, tourism through the roof. Why? Because of Bitcoin and their adoption of Bitcoin. Your overall bond ratings through the roof. Why? Because of Bitcoin and your adoption of Bitcoin as legal tender. They are doing it right and putting it in the eye of the IMF. I'm all about that. But what is that doing for them? It's giving their local businesses a shot in the arm. It's giving their local businesses the ability to actually maintain their wealth, because their other option for legal tender in El Salvador is the US dollar. And while the US dollar has shown some strength recently, again, that's strength relative to other fiat currencies, mind you, it is definitely, or in my opinion, it definitely doesn't have the resiliency of Bitcoin and long-term possibility and valuation of Bitcoin. I mean, Bitcoin's an appreciating asset. End of story. So to have that be in the local, done locally, to me, winner, winner. Winner, winner. And I mean, she mentioned something I alluded to earlier. For those who are going to want to try to get a loan to start a business, to get increase their office space, whatever it is, because of the potentiality of banks needing to hold more liquid assets to offset their potential losses that are coming, not just the commercial, sorry, I keep saying commercial, consumer debt, but becoming commercial debt delinquencies that are inevitable, banks are not going to be lending out a lot more money. Even these big guys, the too big to fails. Think about it. I mean, again, most of this is being done on a local basis, on a regional and local basis. These banks, credit unions, etc., are not going to have the available liquidity to be able to give these loans out. And even if they do, they're going to be a lot more selective about who they're giving these loans out to, aren't they? I mean, wouldn't you be if you were the person responsible for who's going to pay me back? I want to know who's my least risky investor here at this point. Well, of course you would. You'd be picking through these people like, yeah, there'd be some high standards necessary in order to go and allow for this loan to take place. So I think we're going to see a drying up of the capital necessary to expand the markets. And I think we're going to see an increasing amount of delinquencies with regard to commercial real estate. Because again, you can work from home. Work from home. All right. We're going to go and listen to one more section from her about it. And I think it encapsulates the current mindset about people's trusts in the bank or in banks in general. And then we're going to talk about what I have talked about in other live streams about preparing yourself and putting yourself in the best position to be the least affected by what is potentially coming. Okay, so let's listen to her next section and final section for us here.
If banks have more cash set aside, it also means that they can't invest it, which will likely result in their earnings decline. Recently, there have been reports showing that we don't really trust the banking system as much as we used to.
Big surprise.
And so, according to the data recently published by Bank of America, consumer funds are seeing the largest outflows since February of 2014. As you can see here, outflows over the first 2 weeks in October were nearly double those seen in any 2-week period during the entire pandemic. Excluding February of 2014, we just saw the largest 2-week outflow on the record.
All right. So that's going to do it for what we're going to listen. Again, I appreciate Lena for putting out this information. Link to her channel in the description of this live stream. Go ahead over there, follow her. I think you'll appreciate her insights and how what she's talking about may affect your investment thought process. Okay. And the link to the entire video that we just went over is also in the description. So make sure you go ahead and check that out. Thank you again to her. I really appreciate it. But she's talking about outflows of cash from these banks. And we've heard it, or I mean, with the exception of maybe some of the mainstream media outlets, they're trying not to panic people. The government's trying not to panic people, because if you go to your bank and there's a bank run, guess what? You aren't getting your money. You're not going to get it. They're going to literally close the doors, and that will be that, and you won't be able to get your money is the end of the day, because they don't have it. Again, those numbers on the screen on your bank account are nothing more than an IOU. They don't exist. The banks were, prior to COVID, using fractional reserve banking. So in other words, prior to COVID, they only had to have, I think it was 10% of the money that you list in your account ready for you to come and get. If you wanted to come and clean out your account and you have, 6+ figures in your account, you couldn't do it. You had to tell them so they could get the money in to give to you. Now, since COVID, goose egg, zero. They don't have to hold any of it. But as she mentioned earlier, regulators, so the Fed could tell them, listen, Get that money on hand, because if you're going to be writing this stuff off, it could cause a run, and you need to be ready. Do you think that these things, that these factors are going to cause banks to collapse? Tell me what you think in the live chat, and if you're watching this after the fact, in the comments. I want to know. I want to know what you think. So, given all this, what can you do? I put a link in the description also to a live stream I did last week where we talked about a number of things. Mostly how you can prepare to... I lost my notes. How you can prepare for what's coming. Here we go. I found my notes. How you can prepare for what's coming. And I'm not going to go into everything. Matter of fact, there's stuff that's non-crypto related in that video. I'm going to tell you, go check out that live stream, and that way you can see everything I talked about. But with regard to today, let's talk the money portion of what I put out there. It's a good idea to not have a lot of money in the banks. Again, it's nothing more than an IOU. I'm not saying take all your money out and put it under the mattress. Again, not financial advice, not a financial advisor. Old guy, do your own damn research. Figure it out. Come on. You got to be responsible for you and your family. But you should consider, my opinion is, you should consider not having all your money in the bank. You should have a portion of cash readily available. If the banks do collapse, guess what? You're not going to be able to get your money. So here you go. Have some on hand. What are your other options? Again, go to that live stream, link in the description. See everything that I talked about there, because there's a lot of other things you need to consider beside just what we're talking about here today. This is more focused because of what we just went over on Lena's video. Okay, outflows of cash coming out of the bank. They're taking major hits right now in the third quarter, writing off debt, with more to come in the fourth quarter. And the banking system, excuse me, the traditional banking system is already like on a wobbly footing right there. It's ready to collapse. Again, 5 so far this year. 5 collapsed. Why would anybody think that more could not happen, more could not collapse, given all of these things we just talked about? And she mentioned on her video. That'd be crazy to think that. So again, you need to have a portion of your cash liquid that you can use. And if the bank closes the stores, it doesn't matter, because you've got cash on hand. Again, maybe 3-6 months worth, just to be safe, because when the shit hits the fan, it's going to hit the fan, right? I'm sorry, that's the way it is. Then what other things can you consider? Let's consider cryptocurrency. Sorry. Oh, you know what? I want to show you something. And if you think bank runs can't happen, you'd be wrong. And now I know this is not the United States that I'm about to show you, but here you go. Bank run has begun in China at the bank of, I don't know, Kangzhou, on fears that the collapse of Avant-Garde, which we've talked about here before, and numerous people have talked about before, made them insolvent. Okay. Now, Avant-Garde is one of the major construction companies in China. And there was a worry that, they weren't going to be able to pay, or creditors in China, sorry, and they weren't going to be able to make their payments. Well, guess what? This has caused a bank run in China. Why do you think for 1 second that can't happen in the United States? Well, all I'm going to say is shame on you if you think that can't happen in the United States, of course it can. Of course it can. And it isn't just China. It's been other countries in the past. Greece, India. The list is growing. Venezuela. The list just keeps growing. The only reason we don't see much of it here in the United States is because the United States dollar still is considered the world reserve currency, and there is so much transaction going on in the US dollar. But that adds to the problem because you've got countries de-dollarizing every single day, trying to transact in their local currency, whatever it is, the yen, the euro, whatever, it doesn't matter, instead of the US dollar. That's kind of the point behind the BRICS. All that stuff, and we covered that again in another live stream. So go ahead and check out the live streams. And again, if you're new here, hit that subscribe button, click that bell icon, click the all. That way you get notified every time I go live and every time I put out this great information. So let's bring it back. So now, with the potential, in my opinion, or the increasing pressure on banks, the potential for having banks go is just growing in this country. So having some cash on hand, that just makes good sense. Cryptocurrency, to me, also makes good sense. And here's the thing. You don't have to have shit tons of cryptocurrency. You can DCA into cryptocurrency and have it make an effect. Have it help to increase your ability to maintain your wealth. On Crypto on the Rocks, and if you haven't joined me for Crypto on the Rocks, you should. Crypto on the Rocks every Friday. Where is it? I'm going to bring it up here for you. Every Friday, 7 p.m. Eastern. Here, you are the one in charge. You come on. We talk cryptocurrency, and starting 2 weeks ago, we're DCAing, dollar cost averaging, into a bunch of cryptocurrencies. And I let you vote. You're the ones who vote. Whoever's on votes. Yes, vote. And those in the live chat, you vote on what ones we're DCAing into. My point is, I want to show you with as little as $25 a week, it can make a significant help. It can be a significant help to you over time. Okay, if you're thinking just short term with cryptocurrency, you're thinking wrong. Yes. Is there people who make money like overnight with the way crypto is so volatile? Yes. But if that's your game plan, get the hell out of here now. That's not the mindset you need. The mindset you need is that this is an alternative to the current system. This is an alternative to maintain your wealth and your earning and buying potential long term. And that's where you need to be focusing long term. Okay? Long term. So join me, Crypto on the Rocks, every Friday, 7 p.m. Eastern. And you can vote and decide for yourself if you want to go and try this DCA thing. All right. So cash out of the banks, some cash on hand, putting some DCA, dollar cost averaging, into cryptocurrency. What else? What other options do you have? Well, I'm sorry. What's been money since the beginning of time? Gold. And here we go. We're going to refresh this. What's the current price of gold? I mean, look at this. Gold price, $1929.60. And mind you, oh, did it not come up on the screen? I'm sorry. There it goes. I apologize. I thought it was up there. How can you, and gold is heavily regulated. Okay? These governments and TradFi institutions have a stranglehold on the price of gold. But even with that, look where we are on this daily chart with the price of gold. I mean, yeah, all things being equal, that's not a big move. We're talking recent high of 1936. And well, I guess if you're going to go back here, but that's about a month ago, all right? Most local low to 1922. What is that? That's like literally a difference of $14. So gold is another potential option. And for those of you who are followers of my channel, you know that I dollar cost average into gold as well. Link to do that for as little as $50 a month. You can have that add up, and buy whatever amount of gold you want. I usually do 2.5 grams at a time. And excuse me, I have it shipped directly to my door. Link for Acre Gold and your ability to be able to do that is in the description of this live stream. If you're interested in that, or at least do your research, check it out. I mean, you don't want to use them, use somebody else. Doesn't matter. The point is, that is another option. Gold is potentially another option out of this system and gives you, let's think about it. If the shit hits the fan, banks close their doors and collapse. There's going to be bank runs. It's going to be hell here in the United States if and when that happens, regardless of what the government says or what the government tries to do. When it's all said and done, whatever money you have in that bank, especially if it's in a regional bank, credit union, that kind of thing, the likelihood is very high that you will write that off. You're going to be writing off the loss, not them. And even for, again, these larger banks where people have taken their outflows from the regional banks and they've put it in these bigger, too big to fail banks, there ain't going to be enough FDIC insurance to go around to make everyone whole, like they've done when these other 5 banks collapsed this year. It just isn't going to be enough. So you have to be prepared to help you. So again, cash in hand, have some, makes sense. Crypto, again, dollar cost average. You don't have to put a crap ton of money. It's risky. It's still very volatile. Crypto is the most volatile asset on the planet. But that volatility, done right, can be your friend. Again, consider dollar cost averaging. You want to see it being done live. Crypto on the Rocks every Friday, 7 p.m. Again, not financial advice, not a financial advisor, old guy. All right. And then gold, silver, precious metals, other option. Gold been money since the beginning of time practically, right? So consider, and not for nothing, you don't hear about it too much, but banks, these major banks, you know what they're buying? They're buying gold. Why do you think that is? Because they realize that when the shit hits the fan, they'll be completely insolvent if they don't have proper assets to back their debts at the end of the day. That's why they're buying gold like it's going out of style. Just saying, do your own research on that. You don't have to take my word for it. Google it up. Google it up. All right. That is going to do it for today. I hope that I've opened your eyes. And again, thank you to to Lena Petrova for putting out that video. Link to her channel and to that video in the description of this live stream. Please go check out her channel. I think you'll find it very, very, very informative. And thank you again to her for putting this information out and allowing me to share this with you and to expound on it with you. I really appreciate that. And consider, how are you going to prepare if these banks do collapse? Do your own research, figure it out. I gave you some options. I gave you something to think about, I hope. use that as the beginning to go and figure out if and what you should do. All right. That's going to do it. Again, live stream schedule Monday, Wednesday, 10 a.m. Eastern. Fridays, 7 p.m. Eastern for Crypto on the Rocks. Looking to have a few more people. Philip, if you're out there, my brother, look forward to seeing you on Crypto on the Rocks on Friday. Financial Failure FF. Hopefully you'll be back on Friday as well. And Crypto Jar and Tiny Crypto Blog. He was in the chat there for a little while, so hopefully he'll be able to join us next week as well. Okay, it's been great having you here. Make sure you hit that subscribe button, tick the bell icon, click the all, that way you know every time we're going live. All right, I'm out. Have a good week.